Good morning, everyone. See, unless I hear a good morning back, I won't know that you're there. There's too much of light clouding into our eyes. So let's hear the good morning, please. Good morning. Yes, now we hear it all. So let me thank all of you for taking out time and joining in this discussion. The basic format of this discussion is going to be a panel discussion. And I think I've been welcomed, but let me say that my name is Sanjeev Gupta. I am the founder, managing director, and CEO of a merchant banking company called NEXGEN. And I have a very, very great panel. I want to thank Money Alpha 360 Degrees, not only for accommodating our request to make it very powerful for you, but also for organizing it in such a wonderful venue as this one. So I think we are all set for that. I was just describing that we will keep it in a panel discussion format. You have, or I would say you please figure out a place to get a paper, a pencil or a pen, because we want to keep a few minutes for your questions as well. So please note your questions very well and please keep them ready to be asked specifically at the end where we've kept a specific time slot for you. The flow is like this, that we will have 4 sessions within this panel discussion. One, a kind of an opening remarks, before which we will kind of keep a small opening, I would say not remark, but opening comment. And then some questions so that it becomes very illustrative for you all. And even if you have a question in between, please raise the hand. Either we'll take it right then, or I would be requesting my co-panelists to note it down and address it later. So this is the format. So I think why I wanted to explain it to you was so that you are ready for the whole discussion. Before I move forward, I'll just take a few minutes to say what we are doing in today's session. You see, SME is something which is very well recognized, that it's the backbone of not only Indian industry, I would say Indian economy itself, but the World Bank has clearly identified that 95% of the global enterprises are SMEs. So I think the importance is not undermined, rather more enhanced, even globally. Most of you probably sitting in this room are very important stakeholders of this SME, I would say the whole ecosystem. And that's why this session is very important for you, because what we will try to do is understand the challenges and the solutions alongside. So on the challenges, one of the key challenges that I have been observing on SME is that, you see, small and medium enterprises do run it on passion, but their main problem comes when they want to grow the businesses. On that growth part, they are not able to get the right amount of traction in terms of sales, in terms of marketing. And I think that's where I would suggest most of you to use the digital platforms and also join into chambers which focus on SMEs per se. And amongst that, I, as managing committee member of PhD Chamber, invite you there as well. Going forward, we realize that some of the other challenges that I have seen personally is that you are unable to attract and retain the qualitative talent that you people want. I have seen some companies do it very well by structuring ESOP options, engagement programs and others to make these ESOPs valuable. Another thing that will be very value add is to make your company a brand equity company. In the sense, maybe it will be a great option to even list your company. And that brings us to the next challenge, which is related to capital. You don't attract the right capital. You may have a founder's capital, you may have a co-founder's capital, you may have friends and relatives also. Some of you are able to attract venture capital and private equity also, but the listing gets you something which is monetizable, and I think that's very important. My observation is that that gives some of the pharma companies, for example, that I have done IPOs for in my previous avatars, I see that these companies have grown tremendously by using capital as a binding factor for their senior level resource. Please study the case studies of Medicamen and such other companies which actually have seen the crests and the troughs of this kind of a stuff. So we will be discussing some of that. Besides, another thing that happens is that the debt, you are not able to really attract that volume. Some of you run very, very, I would say gems-like companies, but do not have collaterals and others because that's not what your probably business is structured on. At that time, you need something like, I would say, private credit. Do you really structure your companies to attract private credit? Most of the times, you do not even come to know about private credits. So we have brought specifically in this panel a private credit fund manager who would explain to you that prospect, that you know what timings and how and when can you attract that. So going forward, as you go, some of you have raised concerns to me that regulatory and compliances become a very big challenge. And I would be requesting my co-panelists to actually bring out that what you are frightened of is actually just like going on the road and being frightened about that one of the moving cars may hit you, and that's all. It's nothing bigger than that in my opinion. But they are specialists, they will try to bring out. We have specialists on that from the exchange side. We have specialists from that, and that too from NSE itself. And we have specialists who have been advisors on this side. Another challenge that you people have brought out to me, which is very important, is that, you know, even if you go on an exchange which is SME, what do? I mean, do you keep raising money there, and how? It's very difficult, it looks to you people, I am told. I mean, you share with me. We are known to be a hand-holding merchant banker, so we are aware of this. We understand that you are then trying to see that what next for you and how that process will run. I have requested my senior co-panelists here, Nidhi, Maheshwari ji, to also bring that out. Some of my other fund managers will also help on that. So I would probably stop here for a moment and then request everyone on the panel to start with that small opening comment and give you an incisive theme in 3 to 4 words on this session. I'm sure your pens and papers are ready and you will note each one of them, because then that's how you will know what they will add value to you on. And with that, if you allow, I would like to invite first Nidhi Maheshwari ji, who will introduce herself also, her organization, and probably start from there on this comment, and thereafter we'll take it forward.
Thank you so much, sir. Good morning, namaskar, and in fact, it's a good afternoon. First of all, I really would like to thank Money Alpha for giving this opportunity where we can, tell what is the NSE emerge. So let me tell you, first I'll introduce myself. So like sir said, my name is Nidhi Maheshwari. I'm a chartered accountant by qualification, and currently I'm taking care of SME IPO, business development and listing at NSE Emerge. Now, would like to tell what is this NSE Emerge. So NSE provides a dedicated platform for the small and medium enterprises where these companies can come and raise funds through public in this capital market and get their shares listed on the exchange. It was started way back in 2012 and with the approval of SEBI. So it is same as the main board, only the difference, so main board is basically dedicated for mature and large companies where these SMEs are not eligible to enter into main board companies. So it is especially designed for the SMEs where they can raise the funds. So just to give you some, trends or give some data, till now, in last 13 years, around 715 companies have already listed on the NSE Emerge platform. And these around 715 companies have raised around 22,000 crores. and please dhyan dijiyega, these 22,000 crores have turned into the market cap of the around 2 lakh crores. So this is the value addition done by the capital market to the SMEs as well as value addition to the investors. Another thing I would like to say that how NSA is basically, providing and guiding these SMEs. So basically we are, act as a facilitator, or rather I will say as an enabler, where we are guiding these companies from a very initial stage that how and when you can come into this, SME market. So this is one. Another, there is also one pathway from SME to main board. So there is one thing that when a company is coming on the SME board, they have that, ability, if a company is scalable, they can, gradually migrate to the main board. So this is one of the best benefit. I can say that it's a natural pathway to grow from the SME to main board. So this is something about NSE emerge. I think we will go more in details as we move further. So yeah, that's it as of now. And just want to say that NSA Emerge is just, making SME partners as a listed leaders. We want to empower the SMEs to grow, to scale, and to, scale up further. Thank you, sir.
Chander, please.
Please.
So thank you so much, Nidhi ma'am. So I'll just go back to SMEs. Now, what exactly is an SME? Like anybody who is wanting to raise some 10 crores to maybe 150 crores, maybe 200 crores, that kind of fundraising. Now, typically, what are the options if you want to raise funds? You can take debt or you can take equity. Debt has its own problems of collateral security. You might not have collateral. So that's why, you might move for private credit or you might move for cash flow based financing. But what after debt? I mean, how do you create valuation of your company? How do you unlock the hidden value? It cannot be done by debt. It has to be done by equity. And if you look into equity, then if you go to, venture capital funds or private equity funds, they typically do not entertain the SME companies because SME companies are promoter-centric companies. And promoter-centric companies are generally not institutionalized. You will not find a chartered accountant, CFO. It will not have a company secretary. All of these have to be prepared, and that is the requirement of stock exchanges, that you need to have a financial person, which has to be a CFO. You need to have a company secretaries. So a lot of hand-holding is required. And just like ma'am mentioned about NSE, the total number of companies which are listed on both NSE and BSE are about 1,450 companies. And like the total number of capital raised is more than 37,500 crores. So these are the companies which have raised capital not from metro cities. These have raised capital from each and every corner of India. And that is why what I say that SME IPO is actually building Bharat. It is funding those companies which are not fundable by private investors. I mean, these SME companies may not want to give their board seats. They might not want to give their controlling rights, veto rights, because when the VC investors invest privately, they typically ask for all of these requirements. And that is where you raise funds from public. And at the same time, it is very important that you owe a lot of responsibility. And that is why that mentoring is required, where we advisors, our firm takes care of, hand-holding of the promoters. Because if you ask a promoter what is capital market, what is it? I mean, I have to make a 6 monthly results. I have to give a lot of compliances. They are not ready for it. So there is a preparation that goes prior to the listing to meet the regulatory requirement, but to also meet the requirements which the investors are looking for. So, I like this session, and at the time when capital markets are volatile, I would say it's a good time to prepare yourself to be ready to, like initial session was like to make for India, list for India, I think. Yeah. Thank you. Yeah, so my name is Chander and my firm is Transique Corporate Advisor. We help corporates and SMEs to raise funds, and we generally handhold them instead of just so we play a more deeper role in development of valuation of a company from the day they want to list, and maybe from a SME to main board and beyond. Yeah, thank you.
Hello everyone, this is Ishima here. I am one of the fund manager at Alpha AIF. In the recent past, in last 12 months specifically, SMEs has always been seen as like a stepdaughter by the eyes of the investors. But I love numbers, so I wanted to give you few numbers. So if you talk about the last 5 years, if somebody would have invested 1 CR in NSE Emerge, he must have got a return of 7.5 CR. And at the same time, if you have invested 1 CR in Nifty Small Cap, you have got a return of almost 1.5. And with Nifty 50, you've got a return of almost 87 lakhs. So you can see the difference in the returns that you get with the help of the NSE SME, 7.5 to 1.5 to 87 lakhs. I don't glorify SME, but because I understand that the governance, execution risks are always there with the SME space. But that's where a fund manager or portfolio manager comes into the picture. SMEs, I believe that a lot of the companies these days are not investable. But that's where we comes to understand which companies are investable, which sectors has the tailwinds. And Nidhi ma'am has very correctly said that regulators play a very important role to understand. So I remember one day when a merchant banker called me and he said that, do you know that today almost 40 DRHPs has been cancelled by the SEBI? So I believe regulators has a very critical role in the SME space, and at the same time, fund managers, portfolio managers do play a very special role to create wealth for the shareholders. Thank you.
Good afternoon, everybody. I'm Puneet Agarwal. I run a fund called Element One Alternatives. We are a private credit ecosystem where we help our clients raise debt and restructure debt. And we are currently running a fund which is specifically into private credit, where we are generating annuity return for our investors. Just as everybody was saying, again, SME is the backbone of the nation, and without SMEs, I don't think so we will be able to grow out of the limbo that we are in as an economy. We have been in part of where we have been growing at 8%, but why can't we grow at something like 14%, 15%? I believe the biggest challenge is that SME is not getting the opportunities or the access to capital that they actually deserve. Yes, there are challenges there. There are many challenges there that may be in the perspective of compliance, that may be in the perspective of regulatory, or just plain vanilla access to market and capital. And that is where I think everybody on this panel is here to add value on. That is what our core expertise is, to help companies find that challenge and probably find a solution for that, whether it is because of the regulatory challenges or advisory or probably equity and probably somewhere in debt. But the idea is not just raising capital, but the bigger challenge becomes that the promoters and the SME owners understand that how to use that capital, how to deploy that capital and actually bring out value which can actually fuel their growth to the next stage. Most of the promoters look at it. So if you look at SMEs, either they are passion-driven projects or they are family legacy businesses. If it's a legacy business, how do you break out of that legacy and look at the new world with a more integrated manner that you can grow your business out of it? Or if it's a passion-fueled project, you need to find discipline how to run that business, because business start on passion but don't grow on passion. You have to find out, you have to do the boring stuff, you have to stay disciplined, and you have to grow your business well and seek those opportunities out where they are. So I'll just finish with that and then we can take the discussion forward. Thank you so much, Sanjeev.
Yeah, I think your round of applause would really encourage all of our panelists to give much more and much better to all of you in any case. And I thank you for that round of applause also. Now, so I think you've basically seen an overview, and what I would now want you to understand is that this panel as an integrated panel is trying that with, let's say, a merchant banker like NEXGEN, regulator, the advisors, and the fund managers together, we try and give you the solutions which is the fuel for your growth actually. And for that, there'll be some essentials, obviously. I mean, why would Reliance become Reliance, and in spite of a very late entry into this petroleum business as well, and why would other companies not become Reliance is what we will help you decipher, that why would you be the most successful SME graduating into an emerging company and graduating into a multi-billion-dollar enterprise that all of you probably dream about. And for that, the essence of capital. So I think I would now like to start focusing more incisively onto what you need from the capital solution side. And in that, let me start from the first thing is that you may need debt and equity both, and how NSC as the regulator, as the prime regulator of that, really would like to guide us that at what is their outlook as to what the regulator wants, what kind of companies, and what do they want from you in terms of quality, etc., so that they can really accept something like some small companies, small, medium enterprises to really approach for listing. And we will come to a little prior to that portion also, but let's see the stack there. Please, over to Nidhi ji.
So with respect to debt to equity, first I would like to highlight that from the exchange perspective, there is nothing as a benchmark for the debt to equity that leverage should be like this, or that equity should be like this. So what I believe, there should be a balanced capital structure. It should not be like a company is highly leveraged, or it should not be like the company को debt तो लिया ही नहीं है, but they want to come on the equity side. So debt equity, there should be a proper balance with respect to capital structure. And if capital structure is sound, so there is a balance sheet which is strengthening the balance sheet. So definitely it gives more trust to the investors, where it attracts more investors where there is a balanced structure with respect to debt to equity. Now, sir, coming to your next part of the questions, what regulation is taking care of as a quality of company? Generally, there are, I will say, 3 or 4 factors. First, a very crucial, or I will say a critical factor, that is promoter's mindset. तो generally SMEs में क्या देखा गया है, promoters are like it is my baby, and if I am coming to the capital market, I will lose the control over my company. So, and how I can give my baby to someone else who will control this. So when you are entering into the capital market, it is very much clear that there is no one who is going to control or interfere in your business. It is purely your business and will remain the same. You are the owner and you will be running that business. So generally it's a fear in the promoter's mind. Another is promoter's mindset is, why I should go to the capital market? I need to lose my control. I need to give my stake. Only 25% stake you have to give. 75% is as good as you have to. You will be having this. So first, a promoter's mindset that need to be change, or I can say that promoter should think in that way. Ki, for example, I just want to give for example Reliance. So Reliance may. The net worth of Ambani is more than 2 lakh crores, not because they are having the PAT of 80,000 crores. So Reliance company is earning PAT of 80,000 crores, while Ambani's net worth is more than 2 lakh crores because of their market capitalization of shares they are holding in that Reliance company. In the same way, if a SME comes into the capital market, it unlocks the values of the enterprise. So you might be earning the profit of 10 crores, but it will not get any valuation if it is not listed. Once you get your company listed, the value is also unlocked. So this is one, the promoter's mindset and the client risk. Second, what I have seen, fundamentals should be strong. A company, when we say SME IPO doesn't mean only the capital raise, to be very honest. It's more than that. When we say SME IPO, it is like formalization, standardization, better corporate governance, institutional discipline, and brand credibility. And more importantly, the sustainability. All these factors, make a SME towards the path of growth and scaling up. So these are the main factors what I have seen that SME should be formalized, standardized, and should be for the long term. So SME IPO, I'll say it's not a last resort or end. I'll say it's a beginning. It is your first step to enter into the capital market to make your company public, so that you can go to the path towards the growth and scaling up. So this is something I really would like to sum up. An SME company should think for more formalized, organized, and for the long-term vision. So this is I want to sum up, sir.
Thank you. Thank you so much, Nidhi. So, yes, I think that will be very encouraging. Please keep them going. It shows that you are interacting. It also tells us that you are liking what we are, in the way we are conducting this. So, I think Nidhi rightly brought out that a capital raising is not just about raising money only for the business. It's about a full statement for your stakeholders, associates, employees, and the world at large who are probably invested in you as your family, friends, and whatever else. So we are all there to agree with that. But so, as a merchant banker, our belief is that the journey should actually start little before that, before the IPO is actually filed for or whatever. And as Chander rightly brought that out also, that the journey has to start much before. In fact, in our cases, we've run companies for maybe 2 years or even more before they could come out with an IPO, and that's what we are constantly doing. But I would like my learned two co-panelists here, one giving an equity side and one a debt side, to bring out specifically why the company should access which kind of capital, and let's say how much prior to actually coming out with an IPO. And they would need capital in between. It's not just that this money will survive. So allow me to bring Puneet ji first in this, because he should try to bring out the debt versus equity. Of course, private credit is supposed to be very costly. I would like him to address that point later, but first on the when and why. So thereafter, I would request Ishima ji to contribute her part. And Puneet ji, you will have to keep the mic here, not here, because then I don't think your voice gets carried very properly. Please. Thank you.
Yeah. Is it fine now? Okay. So, see, when you are accessing capital, whether it is equity, whether it is debt, the biggest thing that you need to understand it, what you need, what is the purpose of that capital, why do you want to raise it, and eventually how it is going to generate value into your ecosystem. Whether debt is good or equity is good, whether debt is expensive, equity is expensive, depending on what you are using it for and what the end value generated out of it, all depends on that. Private credit, as Sanjeev ji said, is a very expensive option. But having said that, if you look at debt, you have to understand that traditional way of raising debt is not exclusive to you, or it is not shut down to you. When you start a business, the best possible way to expand your business beyond the promoter's capital is always been bank debt, and it has always remained bank debt. Till you start exhausting your traditional options, looking at alternative spaces of raising capital may not make sense for you, because obviously the cost goes high. Now, why would you want to raise? There can be a very generic question that if there are banks available, then why would somebody go to a fund or private markets to raise debt? Equity, it makes sense because you have to access the larger market. But why would you go and raise debt out of the market when banks are there? Our banks are fairly well capitalized. There is no shortage of money as such when we are talking about banks. But you have to understand, if you have a good cash flow, you have a good sustainable balance sheet, and if you have a mortgage, the best lender you can go to is the bank. If, say, suppose your cash flows and your balance sheets have little bit of gaps, but you have a strong mortgage, probably an NBFC will be a better option for you because bank may not look at you. If even then there is a problem where you may not have substantial collateral also, then you have to go to structured products. When you go out to the market for a structured product, that is when private markets start playing a role. Currently, we may call private credit thoda fancy term lagta hai, but having said that, it has been there since the end of times. Earlier, the private credit was called money lenders. Then companies started lending to other companies, calling it ICD, intercorporate deposits. Now it is going through funds. It is called private credit. But having said that, debt is already there in the market, and the cost of capital has always been there. But at the end of the day, whether you can sustain it, your business model can sustain it, and how well you use that capital, that is what is important. Yeah.
For us, being an
So I agree, Puneetji, you very rightly brought out the positioning of your private credit, and you rightly brought out that cutting out the fancy terms, it's actually the debt. So one thing I would like the entire ecosystem here and outside to understand is that any day, wherever there is an optimization, then private credit could play a very, very important role because it avoids the much higher costing, much higher, I would say much higher valuable equity to be diluted. And that's what is the gameplay, and that's what all of the people in this room, I want them to understand that that's a very, very optimum combination. So you brought it out, but I thought I will reinforce. Thank you for that. Ishima ji, please.
For us, being an equity fund, we always try to understand the intent of the management and the utilization of the funds. So I'll try to explain this with an example. So few months back, I was traveling and I was meeting one of the management, and they were raising funds. They've already raised one fund a month back, and that was in hypothetically 100 CR valuation. And this fund, within a month, the management is, did you get any kind of technology developed, any patent, any new order book value, anything in your hand? What was the rationale of a 5x valuation within a span of a month? They didn't have an answer. I said, who were the investors in the previous round? Few of the investment bankers. So that was kind of a red flag for us. We didn't invest in that company. So for us, putting the equity, we really wanted to understand the intent of the management and again, the utilization of the funds. And when we give equity to any of the company, we don't ask what will be your top line and your bottom line. We'll ask, give me milestones for me as an investor for the next 4 quarters. As an investor, what do I need to track? How will you utilize the shareholders' fund? Next quarter, the factory will be operational, or at least you will buy the factory. After next months, will you buy any kind of machineries? So debt and the equity, both are equally important. I just wanted to understand the intent because while taking the debt, they're very cautious. कि तो repay करना है, interest की monthly installments आएंगे, equity shareholders की money लेके बैठ जाओ. Who is going to take the answers? So that time, being a fund manager, it's very important for us to understand how are they going to utilize the equity. Thank you.
Great, great. I think so. My take on this is, I would say a combination of debt and equity is what has been very rightly brought out by all of us. That is what is essential. I'm not saying this just because NEXGEN remains one of the largest debt raiser of this arranger of this country with almost an enviable track record, but I'm also saying it that SMEs as corporates should understand that they can use a model which is time tested, which is actually on the, I would say the equations of financial markets has been well proven and is a very solid model. To that extent, an integrated fundraising is actually a very important solution, and that's what we were trying to bring out to you. So now we would probably like to move forward by saying, when you are raising this fund and you've understood that you have come to a requirement of raising this fundraising, the most brilliant minds in your setups should be asking the question, what should be the objective of this fundraising, what should be the cost of this fundraising, and what should be the between the various options, what should be your most optimal solutions. And in that sense, I would again go back to my right-hand panelists, starting with Nidhi ji and then Chander ji, who should try to bring out respectively what would be the most important challenges to be addressed and what should be the most important objectives to be therein addressed also.
So, sir, I'll answer in two parts. First, key challenges are facing by SMEs. And another is objective. Objective is altogether different when you have already set your mind that we want to come in capital market. So I'll tell what can be your objective and what should be your objectives. So first, key challenges. What we have observed, there is a very limited awareness about the SME IPO platform. To be very honest, लोगों को नहीं पता है कि this is also one of the alternative available for the SMEs. They generally think traditional way of funding. पैसे की ज़रूरत है तो either we will go to bank, friends or families, or now PEs and PE funds have come into the market. But अच्छा, I will ask something from you. कितने लोगों को पता है कि if we want to raise the fund, but at an initial stage, I want to discuss. I want to know कि whether I can come to the capital market or not. I can go to exchange and can have discussion. How many of you know कि मैं capital market में जाके या NSE के office में जाके discussion कर सकता हूँ? Have you ever met any NSE official and discuss your SME IPO potential? Any of you? Please raise hands. I think no one.
I only see one hand, which is yours.
So from this platform, I really would like to tell that NSE officials are very much approachable, and we understand कि हम आज बात कर रहे हैं तो it might take 2 to 3 years to come, to come to the capital market. But from day one, at a very initial stage, we are there to handhold you. We are there to guide you. So please come to our office and we can have our discussion over a cup of coffee. So this is, a very key main challenge that people even not aware about this platform. So it is our duty. We are also creating awareness through the, in the collaboration of so many institutions and from such platform. Second, what I have observed that perception is capital market is complex. बहुत ज़्यादा डॉक्यूमेंटेशन करना पड़ता है, बहुत कॉम्प्लेक्स है, एंड इट इज़ नॉट मेंट फॉर दी स्मॉल एंड मीडियम एंटरप्राइजेस. कैपिटल मार्केट इज़ मेंट ओनली फॉर दी लार्ज एंड मेच्योर कंपनीज. जब प्रमोटर सुनते हैं तो कहते हैं अरे कहाँ मेरी कंपनी इतनी बड़ी है जो मैं कैपिटल मार्केट में आऊँगा. बट टू बी वेरी ऑनेस्ट, SME, this platform is especially designed for SMEs only, na. So definitely capital market is also meant for you. So second is perception. Third, a very critical problem is lack of ecosystem connects. So ecosystem connects means who are the ecosystem partners? The merchant banker, the market maker, exchange itself, like I have mentioned कि no one knows कि exchange में भी जाके बात कर सकते हैं. Legal advisors. So generally when एक SME promoter जब mindset बनाता है कि ठीक है, I want to come into this market, I really need money and I want to raise money through the capital and want to make my company public, सबसे ज़्यादा challenge आता है कि किससे जाके बात करें, कौन है जो who will give us proper advisors. And luckily आज तो हमारे पास advisors भी हैं, merchant banker भी बैठे हुए हैं साथ में. तो generally इकोसिस्टम पार्टनर्स के साथ कनेक्शन नहीं होता है तो दे जस्ट ड्रॉप देयर आइडिया देयर ओनली एंड स्टार्ट थिंकिंग टू गो बैंक फंडिंग एंड अदर फंडिंग्स एज वेल. So from this platform I really would like to convey this message. Start networking, start meeting the people from the SME IPO ecosystem so that you can prepare yourself to become a SME IPO ready company. So sir, these are the key challenges what I have observed till now. And now objective. So generally सबसे main है जब हम लोग पूछते हैं कि तो हमारा सबसे पहला क्वेश्चन ही यही होता है कि व्हाट इज योर पर्पस, व्हाई यू वांट टू रेज मनी. प्रोमोटर माइंडसेट शुड बी लाइक दिस कि दे शुड नो कि मुझे कैपिटल क्यों चाहिए और कहाँ पे मुझे इन्वेस्ट करना है. इफ़ आई गेट द आंसर, आप पैसा दिला दीजिए, वो तो हम देख लेंगे कहाँ पे यूज़ करना है. टू बी वेरी ऑनेस्ट, दैट इज़ नॉट एंटरटेनेबल. Exchange will not entertain that. So a person should have a very clear vision, a growth oriented person कि if I get this much of money, I will invest here. अब वो objects क्या क्या हो सकते हैं, whether company wants to expand their business like capex, they want to enhance their geographical reach, they need a working capital requirements, they want to do some R&D, some innovations. So object can be anything, but it should be related to the business only. A person who is raising money from the capital market should use the that capital in the in the business, and business should grow. So very important promoters mindset I am saying, I think again and again, that should be growth oriented and your business should be scalable, and object should be very much clear ki why you need the money. So these factors are there, then you are perfectly eligible for a company for entering into capital market. I think sir I have answered your question, challenges and the objectives.
Fantastic, no doubt. Chander, please add your comments into this.
So I would say we are very lucky that we are hearing from the regulator itself, because a lot of questions you get practical insight. And I was talking to Nidhi ma'am, and I would just like to connect with my practical story that in 2024 we pitched a tier 2 company to bring out an IPO, and that company was exploring whether I should take debt, कि क्या होगा. वो tier 2 problems are very different, कि मुझे कितना बताना पड़ेगा, how will I bring, कैसे रिजल्ट होंगे. And let me tell you, probably in the next 2 months you will see the company which is expected to be the largest SME IPO of the country. We are talking of a company raising more than 200 crores. That is what we pitched 2 years back. The approval has come. It will be listed soon. From the mindset that how will I do it, to actually becoming the largest SME player in the ecosystem. That is one part that yes, education is important. I mean, we need to guide promoters, and promoters understand if you tell them rightly, if you connect them with the right intermediaries. Who are the intermediaries? It has to be a merchant banker who is credible enough. It has to be investors who also look from a longer term point of view. What's happening right now that many companies are getting listed, but probably the promoter mindset that you mentioned is still missing. And what is happening that, we are seeing listing pops. Earlier, the listing gains were maybe 100%, then stock exchange brought a limit of 90%, then it started coming at 90%. Now, if you list positive, you are a success. The biggest success today is your IPO should be listed more than 1 rupee more than your issue price, and you are celebrating. Nobody knows what will happen on day 2, because it is also seen that there is as much selling of 60 to 70 to 80% on day 1. So who are the investors? What kind of long-term vision they are carrying? So probably if the investors also, because actually the investors also new to the system, I would say. All the SME investors, all the SME merchant bankers, they are all new to the system, and they are evolving as the market is evolving, and market is very volatile. So had it, No, in 2024, you bring an IPO and you are sure shot going to get a upper circuit or a 90% listing. Today, the merchant bankers are not opening the IPO. So, if a promoter is having a vision to look that yes, probably investors are also preferring companies who can who can migrate to the main board. So a company who is having like 10, 15 crores of operating profits, 100 crores of top line, because there are separate guidelines for migration. Like NSE has a 75 crores net worth, BS, and NSE and BSE both have slightly different regulations also, very slight differences. Like NSE expects you to be free cash flow positive. There is no requirement on BSE. But the simple message I am trying to say is that, and that is why I am saying that, building Bharat. I mean, a tier 2 company is becoming the largest SME ecosystem player. It's a big statement, and you will see. And secondly, the promoters also should not just look at just listing, because what's happening, that if your vision is only limited to listing, then you don't know how to manage the share price. You are doing business, and then, a promoter is having two focus area. One is business management, second is share management. It doesn't work. You have to look at it, give it time. I mean, I say if the markets are not right, wait for it. What is the hurry for you to, wanting to open the issue? Wait for it. Investors should earn money. Promoters should earn money. You should get credible scenario. Use the funds in a manner that you grow your business, target the BSE main board, and that should be a longer term story, because then listing never leads to value creation. It's a long term conversion. It is the confidence, conviction. If an institutional investor earns in your company, the same institutional investor can support you in a further round, and further round can come at a higher valuation. So, it is more than, but unfortunately, there are different categories of players. So, one should be very careful whom a person is taking advice from, the credibility of the merchant banker, the credibility of the investors, and probably the promoter mindset. All of these, if you look at it holistically, then, and sector, I would say, like we say, sunshine sector or a sunset sector. Probably I have seen that when you start, your sector might be very good. But by the time your listing is happening, the sector valuation might have changed. So it's not that everybody gets a 10 multiple or 15 multiple or 20 multiple. There is also, so markets are forward looking. So what you have seen, a company can come to you, sir, so and so company has got a 20 times P multiple, I should also get. Maybe my sector has changed today. Maybe there is overcapacity in the industry. Maybe there are different challenges. Maybe the there is a intense regulator scrutiny. I would request ma'am to, highlight that the way regulators are looking at IPO, they are not just approving any IPO now. There is a merchant banker is expected, like sir can explain, a merchant banker is expected to do greater due diligence, disclose as much as necessary, or in fact, follow the best practices. And once everything is disclosed, probably even SEBI's view is that yes, we have disclosed, we are not taking the call on valuation. Valuation investors have to take. They will invest, they may not invest. So, if all of these are very deep thinking from a promoter understanding point of view. But yes, you would have seen that, out of the 1450 companies which are listed, about 360 of them have migrated. So these 360 companies, you take any 360 companies, you will see the kind of value creation they have done. They are the champions of the SME ecosystem. Now, whether you want to be a part of the 75% or you want to be a part of 25%, it will not be known by your listing price. It will be known from, all of these aspects that we have discussed. Thank you.
Thank you, Chander. In fact, you
Sir,
did bring
just
out.
want to add one line. Like Sir has mentioned what was happening in 2024 and what is happening now. So I'll just say that market has been evolved now from listing gain story to a fundamental driven investment. Now investor is also more interested, how the promoter is, what is their mindset, what is their vision. Truly said. Now investor is more interested rather investing in any kind of company. They are more interested in whether company is scalable or not. So this is something I'll say that theory has been changed from a listing gain story to a fundamental driven investment. Yeah. Thank you, sir.
Thank you, Chander, once again, and thank you, ma'am, for adding your comment also into that. Because you rightly, both of you rightly did bring out clearly that what, are clearly the objectives, and one of the key objective for any growing company should be that his or their company's IPO should actually target not only just the current proposed listing, but also the graduation to the main board itself, which is where I would say the investors and you yourself will actually see the multiples go up. And key target for any company should be to really perform on the business side. A lot of other issues were also highlighted by Chanderji, which I think we will discuss almost at the end, because that's one section which will try and discuss what further value addition and what models can be discussed or recommended in this country where we can do further value additions, and we'll come to that again, Chanderji. But as of now, I want to ask my two learned fund managers, one from equity side and one from the debt side, that typically, SMEs go through a kind of, I would say, a period which typically in financial world can almost be said as a moratorium period for them to really fructify in terms of an IPO, which is what we were discussing. During this period, so I'm sure you will throw light into that, but what we have seen is a lot of hand-holding period, during that period, money requirement is there. Now, this period typically goes between 12 to 18 months, or in some cases even 24 months. Like, the winter has just come in for the capital market and you'll have to really take them forward further, which Chanderji also brought out. But during this period, how each one of you propose that you can bring in the required capital, and how it can be a value providing capital, and how easily is it available? What are your requirements there? If you could bring out very briefly, both of you, that will be a lot of value add into the session. Thank you.
Please. Yeah. So let me put it this way. Let's break it in two pieces. One is whether you are ready for the capital markets or not, and second, whether the capital markets are ready for you or not. So usually for the first 36 months, I believe, when a business, you are not ready for the capital markets. Obviously, regulators have made some priorities on which companies can take participation in that or not. But having said that, first 36 to 48 months, you are not ready for the capital market. And when you are ready, as Chander said, that the capital markets might not be ready for you. The market is not very volatile. It is not ready for you. So you have to wait and you have to ride over that period so that you can bring out your IPO at the most optimal time. So when in the first phase, when you are in a growth phase, when you are trying to grow out, you are trying to stabilize your business and to move towards a growth-oriented business. As I earlier said, again, traditional sources of capital in terms of debt is always available. Till you exhaust that, you should not look at anything alternative. When you are looking at capital, either because you have exhausted your traditional sources, or you are doing something which is not regular business and it is specifically for the growth of your business. I'll give you a few examples. If you are setting up a new project, new factory, if you're looking for your traditional working capital, nobody can compete with the bank. If say suppose today you don't have that kind of collateral, your drawing power with the bank is at an extreme edge, and you have a, say for example, you have an order in hand and you need to import some raw material out of the country. At that point of time, how would you raise capital? Equity may not be a right option for you because equity inherently is a more complicated product. Valuations are there and it takes a lot of time for you to draw the actual value out of it, even if you're going to the private markets. The only option remains is debt. Now, how would you access capital? आपके पास collateral नहीं है. Your balance sheet is, drawing power is already drawn out. Now there, you will find trade facilities, buyer's credit type of product where you can raise capital to pay for a smaller tenor, say 60 days to 90 days, where you can bring in that raw material, complete that order, and keep your turnover going on. And in the next cycle, when your turnover is there, your bank DP improves and your bank limits improve automatically. So it is not in isolation that it is going to happen. Similarly, you may not be you may be a mid-segment company looking to acquire a smaller company or a technology partner to enhance your overall valuation as well as your balance sheet of your company. Now, banks inherently will not fund you for acquisitions. NBFCs may not be able to help you unless and until you are ready to take money in your personal name against collateral and mortgages, right? Private credit or alternative sources can come in and help you, though they may be at a higher cost. But then again, for 15 months, 18 months, till your balance sheet completely absorbs that new acquisition and brings out the value, that 18 months can give you a lot of leverage in terms of growing your business. So those are the options that are available in the market, whether it is for import, whether it's for export, whether it's for buying. In fact, initially, Chander said that you can raise money from cash flow based products. So there are revenue based funds out there in the market which fund you specifically just on your receivables without any collateral, completely unsecured. There are factoring companies which have been there in the market for a very long time for your bill discounting needs. So these are the various smaller trade type products that are available in debt which can help you ride over smaller periods of storm. Now coming to the other part where you have already, your business is stable, your growth is defined, you are growing at a healthy pace, your balance sheet is strong, you have your future prospects in hand, but the market is not ready for you to come out with an IPO at this present moment. So usually when you are planning for an IPO, it is around 18 to 24 month journey when you start planning for an IPO and you actually eventually get out with an issue. But for example, 6 months before that date comes in and you find out that the market or your merchant banker is recommending that the markets are not right to currently come out with an IPO. It doesn't make sense. The market may not accept it at that point of time. Your industry may be going through a strain. Even in today, geopolitical issues, many things may not work, right? So if those type of situation comes in, then your best option becomes private market. If your IPO is getting delayed by another 18 to 24 months, probably a private equity or a pre-IPO issue can be a huge opportunity for you where you unlock part of your value. Your investors, your current investor get a lot of confidence in your company before the actual main event comes in. And like Chander says, the day one when your listing happens, whether you will be a hero or not depends on whether you're 1 rupee up or not. Then the investors that are with you from the prior days or 24 months are not going to exit on day one because they believe in the story of the company. They've not just come in because they invested in an IPO, they're looking for a way out on day one after making a penny or two. So those are the investors that actually add value. So that is where private market starts playing a role. Whether it is debt or equity, that depends on your requirement and how the company is structured, what is your requirement. But that is where private markets will actually add value. So if you look at it, IPO is you can say it's a milestone in your business that gives you the ultimate recognition and your a wider reach in terms of raising capital. Then when you go on main board, you actually become become pan-India, and in a certain way you can say yourself you're on your path of going global. But the initial days when the gaps comes in, that is where the private markets play a very vital role for you. Cost may be a little extra. Sometimes the value that it brings in is also a little more extra also. Does it make sense?
Very, very good. It makes full sense. Please, you.
So for me, when the company is getting ready for the capital market, I remember when I first met Mr. Sanjeev, so he had a list of questions for me. So one of the question was that, what is your investment horizon in any of the company? I said minimum 3 to 5 years. Because when you give money to an SME company, you can't expect a multi-bagger returns within a span of 6 months or 8 months. You need to be there with them so that the SME companies would realize their potential. But before that, so one of my senior, he built up a magnificent company, great revenue, great PATs, cash flows, everything was there. But the structure of the company was not intact. So now he has to wait for another 2 years to actually structure down his company. So I believe it is very important that your initial people in the regulatory systems or the initial intermediaries like an investment banker or CA community would need to handhold them from the scratch of the company so that they need not to wait for such a long period of time in spite of having all the financials bang on there. So that part is very critical when you are getting ready for the capital markets. And second, you need to have those investors who are there to support you with 3 to 5 years, and they're not there that they'll see a rise in the valuation and they'll go and they sell off in the unlisted market space. So that part is very critical. And when you said that when you are ready but the capital market is not ready for you, I have a very different point of view here. I believe that if your company is fundamentally strong and when you have good investor base on your cap tables, there's nothing to worry. Your company will be there, us investors. So it's been 1.5 years to our fund. Till date, we have not even sold one single share out of our fund. We are there sitting with our companies to support them. So I think the initial structuring and the initial sector, the investor base that you have in your company is very critical to grow the company.
Thank you, Ishima. So I think you would have understood the quality of investment and the horizon of investment makes a lot of difference. And Ishima rightly recounted, you see, one of the key mission statement that NEXGEN tries to bring today on table is, we are not going to be there just to let your IPO be sweating for whether the first day listing gain would be there or not there or things of this kind. And I don't think that that time horizon or that anxiety is worth the capital market. This is not a film that's coming on the cinema halls. And that is why it's the investors like VentureX, led by Ishima ji, is what NEXGEN wants on a long-term basis to build partnerships with. We are known for a very, very long-term horizon. I started Government of Gujarat's advisory in 1999 when the entire regime was against the center at that time in the sense that they were not really aligned. From 1999 till 2018, I cannot imagine even one mandate which I would have missed out. The entire fundraising, the entire thought process, the entire conceptualization involves us at the core of it. We are very proud of that. We want to similarly build very proud-worthy companies, and I think Ishima very rightly touched the core of our heart. We are not looking at you just to get your IPO through. We are going to take you to main boards. Some of the companies which are already listed, in the last 1 day here, I have been discussing with some of the largest, I would say, finance influencers and with some of the largest fund managers that how we take them, plan them over the next 2.5, 3 years to make them into some of the most successful companies. We are going to be sitting with you, not as your board members, but actually as your guide members there in every board meeting, trying to make sure and understand why you are not really doing as well as the fund manager would expect you to. Because that's the money which is the long-term sustainable money. It starts coming at pre-IPO level. Some private credit, some private equity, almost like private equity because it's pre-IPO. And you don't know what that period is, typically. So I think that's the model which we all, along with NSC and everyone, are trying to build. And we do have, I would say, specifically the position and the might to do this. And we would need the support of all of you in that sense also. So before moving forward, I would request Nidhi ji also to present some of the important insights that she's brought for today. It will take a few moments and I would request your patience for that. And for that, maybe we should shift there and you can present your slides maybe. Hannah? Okay, please.
Can we have our presentation or? So generally would like to highlight, current trends in SME IPO market, what we have observed. Go to the next slide, please. So like I have already mentioned about this, till now 721 companies are listed and in same way BSE will be listed. I can say that potential is huge. Why I am saying this? So let me help with some numbers. So as per the data, around 7 crore MSMEs are registered on Udyam portal. And out of these 7 crores, if I keep side micro and if I consider only small and medium enterprises, around 7 lakh companies are classified as small and medium enterprises. And out of this 7 lakh, 721 are listed on NSE and same number on BSE. So see, there is a clear gap in this ecosystem. And we are trying to bridge that gap, want to, aware more and more companies for this SME IPO that they can come and they can use it as. Sure. And like, I think from the very starting, we are mentioning that from SME to main board migration is possible. Like sir has also mentioned, around 300 companies have already migrated. On NSE, around 160 companies have already migrated. And I can say that these are the success stories for the SME market. It's not working, I think. Yeah. So this is the chart. I just want to tell, पहली 300 companies करने में I think we took around 10 years. Another 400 companies we have done in last 4 years. So this is how market has been evolved. It is just because for the more and more awareness is there, more and more ecosystem partners are there. But still, like I have mentioned, potential is still there. The huge potential is here. I will say that out of 715 companies, 65% is catering by majorly 3 states. Mumbai, that is Maharashtra, Gujarat, and Delhi. These 3 states are matured. But what about others? Mainly, we have seen that we are even focusing more on tier 2, tier 3 cities because we can see and we can say that SME hub is there. And to be very honest, from last 2 years, we have seen this trend. Okay, sure. So this is about what is already happened, how many companies have already, has listed on exchange and how they have listed. Now, moving towards the trends, what we have observed. So this is something, like I have mentioned, the capital requirement for MSMEs is still unmet. No doubt there are so many ways and sources like we have discussed, private equities, funds are there, and a traditional way of funding is there, but still requirement is there. So this is one way. Second, what we have seen with respect to what I should say, when a second generation or third generation are joining the business, so they want to focus more on brand visibility, making their business more scalable, and another want to do business more in an organized manner, unlike what was happening, was done by first or second generation. Now, new generation is simply, want to grow business and want to make it more organized, and they want to come in this capital market. So this is what we have observed. Another trend I can see that obviously brand visibility. हर किसी को लगता है कि मेरी company public में आएगी तो I will be able to become more visible. So sir, these are the main trends what I really would like to have and discuss. And just at a very last would like to tell some benefits why a company should consider that we can go to the SME IPO market. Consider an example, if you want to grow your business and you need a capital. And the source of capital, if you go to bank, I'm not saying that bank is, replaceable with the capital market, but still it comes with some obligations. The obligation to repay your EMI. And the situation like this, world-like situation जो अभी हुई है कि आपको there is no gas supply, your production can be stopped, but EMI if you have to pay. So there is always a pressure that if my business is not, working or I'm not getting my payments, still I need to repay. On other side, if you get money from the capital market, I'm not saying it doesn't come with any obligation. It does. obligation is sense of responsibility, sense of using that money in a more, correct manner. So, but again, the money pressure is not there to repay. So this is one of the, main benefit I can see. Again, enterprise unlock value, definitely, like I have given the example of Ambani ji, ki how their net worth is calculated despite of their PAT is of 80,000 crores. Another, there are many sectors where private equity doesn't come, and there are many sectors where a bank doesn't, want to give or want to explore the, for example, tech or many other companies where they can, choose the path for the SME IPO. And some other benefits, obviously, no doubt, geographical reach बढ़ जाता है आपका, credibility बढ़ जाती है. I am again saying the same thing. So benefits are huge if you consider this in a correct manner, in a more formalized manner. So this is what, sir, I really would like to, highlight कि why a company should think for this market, for this SME IPO. Generally क्या है ना कि बहुत ज़्यादा myth और hesitation है कि अगर मेरा मतलब if I come and पता नहीं subscribe होगा भी कि नहीं होगा, will I get money? So for SMEs, exchange, even SEBI has made some rules which ensure the investor, to the issuer, कि whatever you are applying, if you get the approval, you will get that money. Either by the 100% subscription or a underwriter concept is there. So to be very honest, ये सबसे पहले जब भी हम कोई भी advisors, merchant bankers मिलते हैं, सर आप बात तो कर रहे हो, but will it be really possible? मेरे को जानता ही कौन है अभी. To be very honest, मेरे को भी जानता ही कौन है, will I get the money or not? So it's something like you will get your money. Another thing, liquidity होगा market में, whether people will trade it or not. So market maker concept have been introduced by the SEBI. So there are so many benefits and so many, relaxation have been given to the SME companies to think for this way. Another what I really would like to highlight from the Emerge platform that generally जो हमने देखा है, ऑब्जर्व किया है, दैट इज अ वेरी फियर दैट ठीक है मैं लिस्टिंग तो करा लूँगा, दैट इज डन. व्हाट आफ्टर लिस्टिंग? कंप्लाइंसेस बहुत ज़्यादा होते हैं एंड SME promoters take it as a burden, to be very honest. Who will do? I will do my day-to-day business or I will do the compliances. So from this platform, I really would like to, highlight this. Compliances should not be seen as a burden, to be very honest. It should be treated as a stepping stone to the growth path. And to be very honest, better governance, better, transparency, enhance your credibility, enhance the investors' trust, and it is really good for your future valuation. You will get a better valuation if you are a better governed company. You will get a long-term sustainability. So I will sum up by saying this, that rather fearing from the compliances, rather fearing from post-listing disclosures, it's always better to treat it as an investment, to be very honest, that you are investing today to make your company better, corporate governance company, which will give you fruit in future, no doubt. Sir, you want to add something from the merchant banker perspective?
Thank you, Nidhi ji. I think you've rightly captured all the trends and things. I would like to summarize from my point of view, and if time permitting, I would be inviting one small comment from everyone. But I would like to say this way, that one of the most important thing, in my opinion, to take forward the capital market is an institutional-led model, in which you do not really bother about. You see, I'm reminded, I was just sharing with my learned co-panelist, that I'm reminded about a model which Vijay Shekhar Sharma, a dear friend of mine, he has been sharing with me throughout his lifetime, how his pre-IPO journey was always where he was hoping a figure in the mind that he would get for 197, a company which runs Paytm, a very famous company in that sense. How he would think about a valuation and probably was getting a valuation many times over. And when he came to the capital market, he realized a very important fact of the capital market. And to all advisors, to everyone sitting in this room, whether promoters or stakeholders, I would like this to be very clearly understood and explained to all the SMEs, the money that you make without putting it on your papers is actually not going to get you the capital market appreciation of the multiples that you are saying. बनियों की भाषा में अगर मैं बोलूं, 1 रुपए की 4 चवन्नियां होती हैं. अगर आपको वो 4 की 48 या 50 चवन्नियां चाहिए, कैपिटल मार्केट डिलीवर करने की क्षमता रखता है. 10 का मल्टीपल लो या 12 का उन 4 चवन्नियों का, बट यू हैव टू पे टैक्सेस ऑन दैट. This is sacrosanct to capital market. Bring your profits onto your books. Expect to build and dedicate yourself to build a very, very great company. Vijay Shekhar Sharma, he cried on the day when his shares were listed, is I think a fact known to this public. And on that night when I met him and tried to hug him, he was not in a reconcilable position. That was the first time he licked dust because he faced reality. The IPO market or the public market where your public perception is to be delivered, it is delivered on the numbers that you deliver, not on what you've got fixed up backside. So that's very important. Second, please do not fear if your merchant banker is strong enough to get you the qualified institutional buyers and to get you the right kind of institutional investors. Rest assured, you are gonna have a sailing journey till your main board and thereafter. And I don't know why you should be changing horse midstream. Some people do. One of the clear lessons is that choose your exchanges very well, choose your partners very well, choose your associates very well, and I think the journey is a success. Do listen to them. That's from my side as a merchant banker. NEXGEN offers its assistance. From the day you conceptualize, I am a trained venture capitalist, private equity specialist myself. I do bring a lot of private equity, private credit. I do understand all of this. We will be there to handhold you and offer assistance. We can get all the fund managers to you. We can have the exchanges to you. We can get you the advisors that you're looking for on all the fronts. From our side, that's our assistance, offering humble 2-bit from our side. And I would leave it to my learned co-panelists to add 1 minute of, their closing comment, which is with which we will close the session. Starting from Ishima.
As I mentioned again, I talked about the returns of an SME. One more fact about SME is every 4th SME which has got listed delivered a return of at least 33%. So again, not glorifying SME, but this is a very common saying in our fund. 1,000 crore की कंपनी 100 करोड़ की कंपनी 1000 करोड़ कंपनी बनने में कम टाइम लगता है एज कम्पेयर टू 1000 करोड़ की कंपनी को 10,000 करोड़ कंपनी बनने में. सो यू विल फाइंड लॉट ऑफ मल्टीवेकर्स इन द SME space, but I do understand that the execution governance risks are for real, and that's where we come into the picture to provide a stable structure, discipline, and an on-ground due diligence process. Thank you.
Like ma'am said, compliance is not your enemy. It is your absolute friend, and it grows over a period of time. When you raise money from private markets, a part of compliance and governance comes in. When you go to SME board, some part of it is added, and when you come to the main board, then it becomes, you can say, an entire ecosystem. But it is not your enemy. It is just your discipline, and I can assure you, it help you sleep well and grow well as you go along your journey.
Please, over to you.
So just want to conclude by saying this, that National Stock Exchange is closely working with the state governments. We have signed MOUs with around 16 states to create the awareness, to build the ecosystem for this SME IPO, क्योंकि generally जैसा मैंने mention किया है, लोगों को नहीं पता है about this alternative. And just want to say कि पहले generally people think कि if I want to list my company, I need to go to Mumbai, और मुंबई ही में ही I will get listed. But to be very honest, पहले all time में बोलते थे कि प्यासा कुएं के पास जा रहा है. Now time has changed. कुआं जो है वो प्यासे के पास जा रहा है. Capital market is very much approachable, and we are going to tier 2, tier 3 cities to educate people, to tell them about this SME IPO system. And really would like to share that in last 1 or 2 years, we have companies from tier 2, tier 3 cities, like city from Aligarh, city from Lucknow. Sir has also mentioned one company which is again based out of Lucknow, who is going to be our largest SME IPO in size. We have the companies listed from city from the Jharkhand, Orissa, such type of tier 2, tier 3 cities से we are getting these companies are listed. So simply now कुआ प्यासे के पास जा रहा है, capital market is coming to you, and just would like to mention, please take advantage of it. Thank you so much. Thank you for listening to me. Thank you.
Yeah, thank you, ma'am. I would just like to conclude that there was no formal option for SMEs to raise equity funds. And what we have seen the last 4 years, 4 to 5 years, we have seen 80% of the money which has been generated in capital market in SME IPO. So it is a fantastic tool which helps not the tech companies, not only the tech companies, but companies who are working hard, maybe manufacturing companies, maybe companies which generate profits, disclose profits, pay taxes, generate employment. So it is a very big opportunity. We have seen 1400 companies. I do not know what this number could be in the next 5 to 10 years, but yes, it has actually matured as a system from just listing to a long-term performance. So, I mean, it could grow 10x very easily, provided, the companies understand and they look at it from a long term. So that transition has happened in the last 2 years, and the next journey is going to be more beautiful, I would say. Yeah, thank you.
I think the panel deserves a much better round of your show of appreciation. So please be liberal with that. And I need to thank personally all my learned co-panelists. It was very, very enjoyable for me at least. And I'm sure for you as well. Over to you, ma'am.
Thank you. Thank you so much. Can we have one bigger round of applause for that fantastic discussion? It was an absolutely progressive discussion. Before we close, quickly moving to the audience in case if you'll have any questions. We will take one quick question if you have. Yes, can we please pass the mic this side? Just 1-2 minutes more if you can take that question. So you can take that mic, yeah.
Hello. Yeah. Ma'am, a question. Is there any SME index that you are planning to launch? So if let's assume if I want to invest in the index or any ETF, right? So that will help because most of the things will be automatically taken care of.
Sir, I think NSE SME index is already there, like Nifty and other things. You can check on our website.
Okay. Is this tradable?
It's on our website.
Okay.
You can check.
Okay.
That is NSE India.
There's a full index which is NSE BankX.
NSE SME is, NSE Emerge is there. You can check on our website.
Okay.
Thank you. Do we have any more questions? Any thoughts? Okay, we'll take that one as the last question here. This side.
Hi ma'am, hi sir. First of all, thanks for this wonderful session. I am Chander, I'm partner Capital Markets, Dentons, Link Legal, and I have been working with various public issue, SME, KYPs, etc. So I have a very limited question. I think that this is not the exact platform where this can be discussed. But do you think somewhere, as far as disclosure and our process of coming to listing is concerned, it's a bit too regulated or a bit too heavy on the issuers? My question will be to Sanjeev sir and ma'am Nidhi. Somewhere.
Sir, see, NSE provides a platform where a issuer company can come and raise fund, and on the same side, we have a platform for the investor also. So it's our duty to do a proper due diligence for that company, sir. Maybe at the entrance level. Though I just mentioned that for the SME companies, norms are more simplified if we compare to the main board. For example, after listing, you have to, give disclosures for the financials only for the 2 times. That semi-annual September numbers and the March numbers. ऑन अदर साइड अगर आप मेन बोर्ड में बात करेंगे तो आपको क्वार्टरली फाइनेंशियल्स देने पड़ते हैं, एंड सो मेनी थिंग्स आर देयर एक्चुअली. With respect to eligibility criteria, they are simplified to enter into the SME market. With respect to issue size, we have minimum 20 to 25 crores का issue size versus on main board जहाँ पे minimum ही 150 or 200 crores है. So having said that कि अगर सर to be very honest हमारी due diligence और disclosures थोड़े stringent नहीं होंगे तो we might lose the interest from the investor side also. So as a regulator, as an exchange, we need to safeguard the interest of investors as well as to ensure the issuer company as well. And no doubt sir, everything is there, we are there to educate people, but regulations में कोई relaxation नहीं है. If there is a regulation, I can understand regulations are little stringent, but it is for the safeguard to interest the investors as well as the issuer company, sir. This is something to build the trust for the platform, sir.
Nidhi, I'll add something. No, I have understood your point. You see, the battle is always on. More regulation, less regulation. I would put it this way, that if the company is ready to build itself into a qualitative company, obviously it will like to see the marquee names and the qualitative names on the cap table. I mean, that goes without saying. Are your investors long-term or are your focus short-term? That's what you will have to decide up front. There are all the three models that exist, in my opinion. Now, if you are afraid of filing a qualitatively regulated, compliant document itself, or you are disturbed about regulations being too tight, in whose favor is it too tight? Is it not in your favor? It's keeping out, it's distinguishing the men versus the boys. I mean, let our companies, which we are taking to capital market, become men. It saves the bother, as Nidhi rightly brought out. It's my observation that if we have not been doing very qualitative documents, we actually invite 2 rounds, 3 rounds of queries because the document is not well understood. Who suffers? The company eventually. What happens? The restated financial statement becomes old by the time the queries are being addressed. The round is not completed. What happens? My team goes back again. Why don't they just become more, they enforce regulation right in the beginning. They get the right quality documents. And if you are not qualitative, believe me, you are not going to get qualitative investors. And believe me, the valuation distinction that's coming there is because whether your investors gonna stay or you are gonna sweat to what Chander rightly brought out, कि पहले दिन की लिस्टिंग में 1 रुपया बढ़ेगा या घटेगा या वो गिर के 30% नीचे आ जाएगी. Who's selling? We all know who's selling. But who can buy? We all know who can buy. Are we attracting them or not is my 2 bit in this. Of course, this is not the right time, platform or to discuss it in detail. At NEXGEN, with NSC, with some of our fund managers, we are trying to build out a very qualitative, institutional-led ecosystem in this country. How long will it take to succeed? It will be very regulatorily compliant. It will distinguish men between boys. We are working on that. We invite you to participate in that, and we will take you along with us on a long-term basis. My assurance to you on that. Thank you so much.
Thank you.